Did you know that in certain financial crises, banks have legally used customer deposits to stabilize themselves, leaving ordinary people locked out of their own money overnight? Now imagine waking up, checking your account, and seeing your hard-earned savings frozen, reduced, or simply inaccessible. Sounds extreme, right? But headlines and viral videos are now warning that a new banking rule in California could make something like this possible, and it's sending shockwaves across the internet. Here's where it gets even more unsettling. Most people don't actually understand what these rules mean, yet the fear is spreading fast. Some claim this is a hidden policy designed to quietly take control of your money, while others say it's completely misunderstood. So what's the truth? Are your savings really at risk, or is this another case of fear going viral faster than facts? In this video, we're breaking down 10 powerful reasons behind these claims. What's real, what's exaggerated, and most importantly, how you can protect your money before it's too late. Number 1. Misinterpretation of financial policies. One of the biggest reasons people are panicking about this so-called new banking rule is simple: misunderstanding. Financial policies are often written in complex legal language that the average person doesn't read or can't easily understand. When these policies are picked up by social media or sensational headlines, they get simplified in a way that often twists the original meaning. Suddenly, a technical regulation meant to improve stability starts sounding like a secret plan to wipe out your savings overnight. Here's the reality: many of these rules are designed to protect the banking system, not destroy your personal finances. For example, regulations may allow banks to temporarily restrict access to funds during extreme crises, not to take your money, but to prevent a total collapse that could harm everyone. However, when this nuance is lost, it creates fear. Studies in behavioral economics show that people are more likely to react to fear-based information, especially when it involves their money. That's why misleading interpretations spread like wildfire. Think about it. When was the last time you actually read your bank's full policy terms? Most people don't. And that gap in understanding is exactly where confusion grows. Instead of relying on viral claims, it's crucial to check official sources, bank statements, or trusted financial experts. A few minutes of clarity can save you from hours of unnecessary stress. Because in today's digital world, the real danger isn't always the rule itself, it's the misinformation surrounding it. If this video is opening your eyes even a little, drop a comment saying, "I'm staying informed," so we know you're with us. And don't forget to subscribe. It's just one click, but it helps us keep creating powerful content like this for you. Number 2. Bank bail-in fears. Another major reason this topic is causing panic is the fear of something called a bail-in. Now, this sounds technical, but the idea is simple and, honestly, a bit unsettling. A bail-in is when a struggling bank uses its own internal resources, including customer deposits, to stabilize itself during a financial crisis. Unlike a government bailout, where outside money is used, a bail-in keeps everything inside the bank, and that's where people start to worry. This concept isn't just theoretical. In past financial crises around the world, there have been situations where depositors temporarily lost access to their funds or faced reductions. That history makes people think, what if it happens again? And when headlines start linking this idea to new banking rules, it creates a powerful sense of fear, even if the actual risk is much lower than it seems. Financial experts often point out that these measures are considered last resort options, designed to prevent a complete collapse of the banking system. But here's what most people don't realize. Many countries, including the US, have systems in place to protect depositors up to certain limits. That means your money isn't just sitting there unprotected. The real issue isn't that bail-ins are about to happen tomorrow, it's that people don't fully understand how rare and controlled these situations are. Still, this fear highlights something important. You should always know where your money is, how it's protected, and what policies your bank follows. Because peace of mind doesn't come from ignoring risks, it comes from understanding them clearly. Comment below with "Protect my money" if you believe knowing this stuff actually matters. And hit that subscribe button. It takes 1 second, but it keeps us motivated to bring you real, eye-opening content every day. Number 3. Inflation quietly eats your savings. Here's something even more surprising than any banking rule. Your money could be losing value right now, and you might not even notice it. This is called inflation, and it's one of the most silent yet powerful threats to your savings. Unlike dramatic headlines about banks taking your money overnight, inflation works slowly, almost invisibly, reducing what your money can actually buy over time. Let's break it down in simple terms. Imagine you have $1,000 saved today. If inflation rises significantly, that same $1,000 might only have the buying power of $900 or less in the near future. You didn't spend anything. No one took your money. But still, you lost value. Studies in economics consistently show that during periods of high inflation, people who keep all their savings in standard accounts are the ones who suffer the most. It's like a slow leak in your financial bucket. This is where fear about banking rules gets mixed up with reality. People worry about sudden losses, but often ignore the gradual erosion happening every single day. And honestly, that's the bigger danger for most people. The good news? You're not powerless. Simple steps like diversifying your savings, exploring inflation-resistant options, or even regularly reviewing your finances can make a huge difference. So ask yourself, are you only worried about dramatic risks, or are you also protecting your money from the quiet ones? Comment, "I won't let inflation win," if you're serious about protecting your future. And don't forget to subscribe. It's just one click, but it helps us keep creating content that actually makes a difference. Number 4. Digital banking vulnerabilities. In today's world, most of us don't walk into a bank. We carry it in our pockets. From mobile apps to online transfers, digital banking has made life incredibly convenient. But here's the hidden side. The more digital your money becomes, the more exposed it can be to cyber risks. And unlike traditional fears of banks taking your money, these threats are often real, active, and growing every single day. Cybersecurity studies consistently show a rise in banking-related cyber attacks, from phishing scams to data breaches. Hackers don't need to break into a vault anymore, they just need access to your login details. A single click on a fake email or a weak password can open the door to serious financial loss. And the scariest part? These attacks can happen silently, without any warning, until you check your account and notice something is wrong. Now connect this to the bigger fear around banking rules. When people hear that systems could freeze or restrict access, it amplifies an already existing anxiety about losing control over their money. But in reality, many financial losses today come not from policies, but from avoidable digital vulnerabilities. The good news is, protecting yourself doesn't require expert-level skills. Simple steps like enabling two-factor authentication, setting up instant transaction alerts, and never sharing sensitive information can dramatically reduce your risk. Think of it like locking your front door. You wouldn't leave it open overnight, so why leave your financial data unprotected? Because in the digital age, your greatest financial defense isn't fear, it's awareness and action. Comment, "My money is secure," if you've already taken steps to protect your accounts, or if you're starting today. And hit subscribe. One click for you, but it means everything for us and keeps this valuable content coming. Number 5. Regulatory complexity confuses everyone. Let's be honest, most financial regulations are incredibly complicated. They're filled with long documents, legal terms, and technical language that even well-educated people struggle to fully understand. And this complexity creates the perfect environment for confusion, fear, and misinformation to grow. When people don't understand something that directly affects their money, their minds often jump to the worst-case scenario. Here's what typically happens. A new rule or policy gets introduced, often with good intentions like improving financial stability or preventing fraud. But instead of being explained in simple terms, it gets summarized in headlines or social media posts that focus on the most dramatic angle possible. Suddenly, a regulation designed to protect the system starts sounding like a hidden threat to your personal savings. And because most people don't have the time or patience to read the full details, they rely on these simplified and often misleading explanations. Research in communication and behavioral science shows that when information is complex and unclear, people are more likely to rely on emotions instead of facts. That's why fear spreads so quickly in financial topics. It's not always because the situation is dangerous, it's because it's hard to understand. So what can you do? Start by following trusted financial educators, reading simplified breakdowns from reliable sources, and asking questions instead of assuming the worst. You don't need to become an expert, but gaining even a basic understanding can protect you from unnecessary panic. Because at the end of the day, confusion is powerful, but clarity is even more powerful. Drop a comment saying, "Clarity over confusion," if you believe understanding money is the real power. And don't forget to subscribe. It's just one click, but it helps us keep breaking down complex topics just for you. Number 6. Hidden fees and account policies. Here's something most people don't think about until it's too late: the fine print in your bank account. While everyone is worried about dramatic scenarios like losing all their money overnight, the truth is, many people are already losing small amounts through hidden fees and unnoticed account policies, and it adds up faster than you think. Banks often include terms like maintenance fees, inactivity charges, withdrawal limits, or minimum balance penalties. Individually, they may seem small, just a few dollars here and there. But over months or years, these charges can quietly drain a significant portion of your savings. And the worst part? Many people don't even realize it's happening because they rarely check the detailed breakdown of their statements. Now connect this to the fear around new banking rules. When people hear about regulations, they imagine sudden, massive losses. But in reality, the more common issue is gradual loss through overlooked policies. It's not dramatic, it's not viral, but it's very real. Financial studies show that a large percentage of account holders are unaware of the exact fees they're being charged regularly. The good news is, this is one of the easiest problems to fix. Take a few minutes each month to review your statements. Understand your bank's terms. Ask questions if something doesn't make sense. Even switching to a more transparent account can save you money over time. Because sometimes, it's not the big, scary rule that hurts your savings, it's the small details you ignore every day. Comment, "No more hidden fees," if you're done letting small charges eat your money. And hit subscribe. It's one simple click for you, but it keeps us going to uncover truths like this every day. Number 7. Economic instability creates fear. Let's zoom out for a second. Sometimes, the fear around banking rules isn't really about the rules themselves, it's about the bigger economic picture. When people hear words like recession, market crash, or financial crisis, it naturally creates anxiety. And during uncertain times, even small policy changes can feel like a sign that something much bigger is about to go wrong. History shows us that during periods of economic instability, trust in financial systems tends to drop. People start asking questions like, "Is my money really safe?" Or, "What if the system fails?" This fear isn't irrational, it's human nature. Studies in behavioral finance reveal that when uncertainty increases, people become more sensitive to potential losses, even if the actual risk hasn't changed significantly. Now, when a new banking rule enters the conversation, it often gets tied to these broader fears. It's no longer just a regulation, it becomes part of a larger story about economic collapse or instability, even if that connection isn't fully accurate. This is how concern turns into panic. But here's the important part. While economic cycles go up and down, there are always ways to stay prepared. One of the smartest moves is to avoid keeping all your money in a single place. Consider spreading your funds across different accounts or even building a small emergency reserve that's easily accessible. Because in uncertain times, the goal isn't to panic, it's to stay prepared, balanced, and in control of your financial future. Comment, "I stay prepared," if you believe in being ready, not scared. And don't forget to subscribe. It's just one click, but it helps us keep bringing you real, powerful insights like this. Number 8. Social media turns fear into viral reality. In today's world, information doesn't just spread, it explodes. And when it comes to money, fear spreads even faster. Social media platforms are filled with bold claims, dramatic titles, and eye-catching thumbnails designed to grab attention. But here's the problem. Not all of this information is accurate or complete. In fact, many viral posts about banking rules are built to trigger emotion first, facts later. Think about it. When you see a headline saying your savings could disappear overnight, your brain reacts instantly. You feel urgency, maybe even panic. That's not by accident. Studies in psychology show that content driven by fear and uncertainty gets more clicks, more shares, and more engagement than calm, balanced explanations. So creators often exaggerate risks to make their content go viral. This is exactly how confusion around banking rules grows. A small policy update gets turned into a worst-case scenario story, and within hours, millions of people believe it's happening right now. The line between possibility and probability becomes blurred. And before you know it, fear feels like reality, even if the actual risk is minimal. So what can you do? Start by slowing down your reaction. Ask yourself, Is this information verified? Is there a credible source behind it? Follow reliable financial channels instead of relying on random posts. Because in the digital age, your biggest protection isn't just your bank, it's your ability to separate facts from viral fiction. Comment "Facts over fear" if you refuse to believe everything you see online. And hit subscribe. One click from you helps us fight misinformation with real, valuable content every day. Number 9. Government oversight is often misunderstood. One of the biggest myths causing panic about California's new banking rule is the idea that the government can suddenly seize your money. This is far from reality, but the misconception spreads quickly because people don't fully understand how financial oversight works. Regulators like the Federal Deposit Insurance Corporation, FDIC, exist specifically to protect your deposits, and their role is much more about safeguarding the system than taking individual accounts. Here's the key point: regulations and oversight are designed to prevent chaos, not create it. When a bank faces issues, regulators step in to stabilize it, but they do so within strict legal frameworks that protect ordinary account holders. In other words, your everyday savings aren't at risk from sudden government action. What is at risk is ignorance about how the system works. The problem is, the average person rarely reads detailed information about government protections. Headlines and viral content often skip the context, making it seem like your funds could vanish overnight. Behavioral economics shows that people overestimate rare risks when they are dramatic or emotionally charged. Fear spreads faster than facts, which is why misunderstandings about oversight create so much anxiety. So how do you protect yourself? Start by learning about deposit insurance limits, the safeguards your bank uses, and the exact scope of government oversight. Knowledge is your first line of defense, and understanding these mechanisms turns fear into confidence. Being informed allows you to react wisely rather than panic unnecessarily. Because the truth is, most threats you hear about aren't immediate, they're misinterpreted rules amplified by misunderstanding. Comment "I trust the system" if you're ready to understand how your money is really protected. And don't forget to subscribe. Just one click helps us continue breaking down confusing topics into simple, actionable insights. Number 10. Lack of financial literacy is the real threat. The last, and arguably the most important, reason people panic about California's new banking rule isn't the rule itself. It's not knowing how money works. Financial literacy, the ability to understand and manage your finances, is the foundation of protecting your savings. Without it, even minor policy changes can feel like catastrophic threats because people don't have the knowledge to put risks in perspective. Studies show that a significant portion of adults struggle with basic financial concepts like interest rates, inflation, or even reading a bank statement. When people lack this understanding, they are more likely to believe exaggerated claims, panic, or make hasty decisions that actually harm their money. In other words, the real danger isn't the new banking rule, it's being unprepared and uninformed. The good news: financial literacy can be learned. Start small, read simple guides, watch reliable content, or talk to trusted advisors. Learn to track your accounts, understand fees, and know the protections in place for your money. Even 10 minutes a day of financial education can make a huge difference over time. When you understand your finances, you don't live in fear, you live in control. Think of it this way: policies, rules, and regulations will come and go, but the knowledge you build is permanent protection. The better you understand your money, the less any sensational headline or viral post can shake you. Financial literacy turns fear into empowerment, and that's the ultimate safeguard for your savings. Comment "Knowledge is power" if you're ready to take control of your financial future. And don't forget to subscribe. It's just one click, but it helps us keep creating videos that protect and empower your money. So, let's take a step back and look at the bigger picture. California's new banking rule has caused a lot of buzz and a lot of fear, but as we've seen through these 10 reasons, the real threats to your savings aren't always what the headlines suggest. Misinterpretations, bail-in fears, inflation, digital vulnerabilities, complex regulations, hidden fees, economic instability, viral social media posts, misunderstood government oversight, and a lack of financial literacy. These are the factors that can quietly, or dramatically, impact your money if you're not aware. The good news is that knowledge is your most powerful tool. Understanding how banking rules actually work, staying informed about fees, keeping an eye on inflation, protecting your digital accounts, and building your financial literacy can turn fear into control. It's not about panicking over hypothetical scenarios. It's about taking small, consistent steps to secure your future. Even simple actions like reviewing account statements, diversifying savings, enabling alerts, or learning about deposit protections can make a huge difference in your peace of mind and financial security. Remember, headlines are designed to grab attention, but your money is safest when you focus on facts, not fear. Policies and rules will evolve, and economic uncertainty will always exist, but your ability to understand, plan, and act is permanent. You have the power to stay informed, prepared, and confident. At the end of the day, protecting your savings isn't about luck, it's about awareness, action, and ongoing education. Start today, stay consistent, and don't let misinformation dictate how you feel about your money. The more you know, the less risk there is to panic, and the more control you have over your financial future. This is your wake-up call. Be informed, be proactive, and take control before anyone else tries to tell you your money is at risk. Your financial security is in your hands.